Well, I would never invest in a company like Tata Motors. And I want to give you 7 reasons why I would not invest in Tata Motors. So let's begin. Number one, as usual, as I have been discussing for the past 3 weeks in this month, the first reason is negative free cash flow. I looked at data from 2011 till 2021, the 11 years data. Tata Motors has produced an operating cash flow of 2,90,000 crore, which is a huge amount of money. So the company is making money on an operating cash flow level. However, if you look at the capital expenditure of the company, it is 2,67,000 crore during that 11-year period. So it makes 2,90,000 crore, but that all of that profit, the operating cash flow, goes into capital expenditure. Almost all of it is going to capital expenditure. Out of the remaining amount, you have to deduct the interest paid to the banks because there is leverage on the balance sheet. Interest payment is 62,000 crore. So already you are in negative territory. Loan repayment is 2,75,000 crore, right? So net, if you see, the company has produced a negative free cash flow of 3,15,000 crore during the 11 years period from 2011 till 2021. So if you look at all of this data from 11 years, you add up all these cash flows, you will find that the company is not making money. In fact, the company is spending 3 lakh crore more than what it is earning. So first reason is negative free cash flow. I want to invest in companies that produce a positive free cash flow, and not just a positive free cash flow, but a growing positive free cash flow. So if you look at companies like Asian Paints, Pidilite itself, the free cash flow has gone up 30 times in the same 11-year period, and the stock price has gone up, say, 12 times for Pidilite. So the market looks at free cash flow. Okay, it's not that the market is only looking at profit and loss account statement. So first reason is negative free cash flow. I would never invest in Tata Motors. Although it's a reputed company, a lot of people are following it, I am not interested. There are 5,000 companies in the stock market. Why would I invest my money in a company that is making a negative free cash flow of 3,15,000 crore rupees? Number two, high debt on the balance sheet. This is very obvious, right? The total debt on the balance sheet of the company is 1,42,000 crore, roughly $20 billion. Okay, that's a lot of money. And this is as of March 2021. So high debt means high interest expense. High interest expense means lower profits. I don't want to get into such a company. Number three, for the past 3 years, the company has been consecutively reporting losses. The company itself is telling you that we are not making money. Just look at the profit and loss account statement. The total loss in the past 3 years is around 50,000 crore. It's more than 50,000 crore in the past 3 years, which makes sense, right? I mean, the company is producing negative free cash flow and there is a lot of stress. Plus, it's a cyclical business. So look at the profit and loss account statement. I would not invest in a company that is generating losses. Number four, the company hardly pays any dividend. In the cash flow from financing activity, there is a line item called as dividend paid. Go to screener.in, type in Tata Motors, go to cash flow from financing, look at the dividends paid, compare that to operating cash flow. It's peanuts, okay? The dividend paid is hardly anything. So the shareholders are not making money. Number five, it's a capital intensive business. I discussed Airtel business model in one of my videos. So it's a capital intensive business. As you can see, they are producing cars, so a lot of expense. Plus it's a cyclical business. It goes up and down with the economy, the demand. So cyclical and capital intensive business, which is the reason why you see profits in some years, losses in some years, overall negative net free cash flow. Number six, if you look at the operating margin, it's given on screener.in. The operating profit margin is 10 to 15%, minimum 10%, maximum 15%. I mean, it's very low. I want to invest in high profit margin companies. More the profit, the better it is for shareholders. There are some companies which easily make an operating profit margin of 25%. In fact, there is a company called India Energy Exchange. Their profit margin is in upwards of 70%. 70% profit margin. Here you have 10 to 15% profit margin, not satisfactory. I want to invest in a company that makes at least 25-30% profit margin, so there is something left for the shareholders. Highly capital intensive business, a lot of debt on the balance sheet, negative free cash flow, cyclical business, capital intensive business. Why would I put my money into such a company? There are 5,000 companies listed in the stock market. We as retail investor, we only need to invest in say 20 companies at the max. How many can you track in your lifetime? Number 7, well, the whole world is tracking Tata Motors. Well, if too many people are tracking a company, then the company becomes overvalued. Everybody wants to buy the company for reasons only they know. I don't know the reason. I am not interested in the company because I look at cash flows. I don't even look at the profit and loss account and balance sheet. The cash flow statement of a company for the past 10-15 years gives me the entire story of the company. So if a lot of people are tracking it, it's a familiar business. I don't want to invest in a familiar business. I want to invest in a business where people have not understood the value yet. People have not understood the business yet. So I am hunting for those kind of bargains in the stock market. So let me repeat the 7 reasons again. Reason number 1, negative free cash flow. Reason number 2, high debt on the balance sheet. See, the first 2 reasons never change because those are the first things that I look for whenever I'm investing in any company, any industry. I don't care which industry it is. I want to see whether the company is making money or not, and I want to see whether the company makes money without raising capital, either from equity financing or debt financing. Reason number 3, past 3 years consecutive losses. And the total loss has been more than 50,000 crores. So is roughly $7 billion. 1 billion is I think 7,000 crores, 7,500 crore. So 50,000 crore loss means say $7 billion loss. Why will I invest in a company that has reported a $7 billion loss in 3 years? I don't want to go there. Number 4, it hardly pays a dividend. Number 5, it's a cyclical business. It's a highly capital intensive business. It is not an easy business to be in. Number 6, very low operating profit margin. It is in the range of 10 to 15%. I want operating profit margins of at least 25%. More the merrier. And number 7, the whole world is tracking it. I don't want to get into such a company. I want a company that has got hidden value so that when the value unlocks, shareholders make money. And when till the time the value doesn't unlock, shareholders keep making the dividend at least. So those are the 7 reasons why I have not invested in Tata Motors, and I will never invest in Tata Motors. There are other fine companies to invest in which are actually making money. Companies like Asian Paints, Pidilite, Nestle, Hindustan Unilever, Castrol. Lot of companies are making money. Dabur, India Energy Exchange, as I said, then the CDSL and all these companies. Simple business models, Britannia, easy to understand businesses, Gillette, Colgate, and I think Bata is also making money. So a lot of names that come to my mind, I have looked at the financials and they seem to be making money in terms of free cash flow. But Tata Motors, no, it is not my type of a company. So those are the 7 reasons. So my question to you is, are you invested in Tata Motors or are you thinking of investing in Tata Motors? If yes, then have you looked at this perspective? Watch this video, try to understand what I am trying to say here. Look at the stock price of Tata Motors. You will see huge fluctuations in the price of Tata Motors. Why do these fluctuations occur? Because it's a cyclical business. It keeps making money, it keeps losing money, net, it keeps losing money, right? So I have given you a different perspective on Tata Motors. Try to understand this and try to implement this in your stock selection process. I am not saying Tata Motors is a bad company. It comes from a very strong corporate house. Ratan Tata is a highly respected person. The Tata Group is a highly respected person. But just because the group is highly respected doesn't mean that all of the companies in the group are making money. TCS is making huge money, but Tata Motors, no. So these are the reasons why I have not invested in Tata Motors. Thank you so much.